Hello and welcome to BQ Prime. A very good morning to all the viewers. I'm Hira Dadia. One stock that is in focus is a JK Tyre on the back of a spectacular set of numbers that have been reported this time around. Sanjeev Agarwal, Chief Financial Officer at JK Tyre, joins in. Sanjeev, good morning and welcome to the show.
Good morning, Earl, and thanks for having me on your show. It's my pleasure.
Always a pleasure to speak to you as well. Sanjeev, my first question coming to you is a good growth that we've seen at an operational level, as well as if you see from a profitability front as well. What has led to this kind of numbers, and is this something which is sustainable?
Yes, definitely. So, the financial year 24 has started on a very positive note, and with various macroeconomic factors supporting the growth all the way. And this growth, I believe, is likely to continue because there is a robust demand in the domestic market as well as in the export market, which has started to revive recently after having seen subdued kind of a market in the last couple of quarters. So now the things are improving on export market front as well, and the domestic market has been continuing to be very robust. So we are expecting the growth to be continuing in next quarters as well.
Right. So overall, one of the aspects that I see is that the raw material costs have reduced substantially, and that's something which has aided margins as well. What's the trend looking like from here on?
So the raw material cost, after having seen an unprecedented increase in the last 2 years, started to come down from October 22 onwards, right? And that has actually given a stable kind of a raw material scenario now. And we are seeing that because the commodity prices, the crude oil prices more or less are stable, and the raw material which we buy, the inputs for us, that is also in a stable scenario situation today, and which is likely to continue like this. And we see that this will continue to give us good growth as well as good profitability going forward.
Right. So if you have to look at the various segments from truck and bus to passenger line radial to 2 to 3 wheelers, where is the growth coming on? I do understand that passenger line radial is where we have, where the company has the maximum capacity. But where are you seeing growth in terms of volumes?
So we are seeing growth all across our product segments, including the PCR segment, two-wheeler and three-wheeler, as well as in TBR, definitely. So this is coming all across our product segments. And the best thing is that we have also been improvising and premiumizing our product range. And that is actually adding to our profitability. And we have seen a big jump of 450 basis points increase in the operating margins on YOY basis. So that is because of the product mix improvement and also because of the stable raw material prices.
Right. And when you talk about premiumization as well, how how is that panning out? And from here on, how much of your revenues do you think can come from the premium segment? Because, this was something which I have been personally tracking specifically for the two-wheeler space, that since Hero, Bajaj and Royal Enfield, Hero Bajaj, we did see the premium segment launches recently, and, Royal Enfield is already present, and all the three are OEM partners to a JK Tyre. Do you see their contribution to the revenues increasing?
Yes, of course, because we have also been, as I said earlier, we have been launching innovative products and very high premium quality products as well. And the same is the case not only in the two-wheeler and three-wheeler segment, which you have mentioned, but also in the case of PCR segment as well. And we have launched this smart tire and also some other tires, puncture guard tires. And the main thing is that we have been now improving the sales in the 16-inch plus tire category, which is a premium category. And this is contributing a larger revenue in the company. So the percentage is different for various products, but this is improving quite a bit.
And how is the business on the replacement front working? Because a trend that again comes up is that the shelf life of a new tire is much less as compared to what it was earlier, taking into consideration the way the weather conditions are changing, the way the infrastructure in the country is as well, right? So, say for example, if a tire would function for 4 years, the shelf life probably has now come down to 3 years, right? So, taking that into consideration, how are you seeing the role of replacement demand in the overall business?
So the replacement demand has been continuously increasing. Just to give you an example, like in the case of road infrastructure improvement and the new roads are being constructed. So we have become the world's second largest road country in the world. And that is helping us to increase our sales all through. So the shelf life, as you said, might have come down, but actually the improvement in the quality that is helping. So I don't think that is going to impact much, but we are seeing a very good growth in terms of the quantity and in terms of the quality of the products. Low noise tires, then of course the rolling efficient tires, low rolling efficient tires, that those are being launched, and that is helping us to increase the sales in numbers.
Right. And from a margin front as well, will the company be able to maintain this double digit, or there's a possibility that we could move to higher double digit as well?
Definitely, there is a possibility, as we have been working all along on efficiencies, improvement in efficiencies and improvement in the capacity utilization, increase in volumes. So larger scale of volumes definitely will improve our margins. And if I see that the stable raw material prices continues, then there's no way that the EBITDA margin will not improve. So that definitely will improve. And I see a very good margin improvement possibility going forward.
Right, right. And from a top line front, if you have to look at FY24, would it be right to say that around a 14.5 to 15,000 or little over 15,000 odd crores is what we would look at in terms of the turnover?
In terms of the turnover, definitely we have been increasing because of the increase in the quantities sold. We have been increasing and are getting very good push upwards. So it would be difficult to give a particular number as of now, because this is just the beginning of the financial year 24, and we have gained good numbers in first quarter. So this should be crossing the last year's number definitely by a big margin.
Okay. And from a capacity perspective, I think 34% capacity utilization is where the first quarter was at. Any expansion plans?
So we have been working, as you would recall, we had earlier announced about 1,100 crore rupees of expansions in capacities, including through debottlenecking. And out of that, debottlenecking has already been completed in PCR. And we are now working on two projects for expansion of capacities. One is in PCR at Banmore Tire Plant, and the other one is at for the TBR tires. And this is at Luxor Tyre Plant, which is in a subsidiary company. So these two capacity enhancement projects will get commissioned by the end of this financial year. So this will give a good headroom for us to increase our numbers further.
Right. And what's the update looking like with Cavendish and Tornell?
Both are doing very well. In fact, they are both doing excellently well, and they will contribute. They are contributing and will continue to contribute better.
And overall, if you see in terms of the net debt to net debt position, is the company comfortable with the current leverage?
So we have been working for the last couple of years on deleveraging strategies, and we have reduced our debt. For example, in the quarter ended June, we have reduced our debt by 250 crores, and which is primarily on account of efficient working capital management and also term loan repayment, scheduled term loan repayments. So we are continuing to work on that, and the debt to EBITDA levels have come down significantly. So the numbers are quite reasonable now, but we are still continuing with that strategy. And going forward, you will see a big improvement in that number. And we are committed to reduce our long-term debt by about 25% in the next 3 years period by FY26.
Right. And my last question coming to you is, recently we had the Commerce Ministry ease import restrictions on pneumatic tires. What would this actually mean for the industry as well as a company like yours?
So far, we have not seen a major impact of that because in any case, the imports were through the licensed route. So restrictions in terms of even if the restrictions are there, this is not impacting because there is a good growth and the potential in the country.
Right. But what's the overall impact? Is it positive from a business perspective?
Yes. Yes.
Right. All right, Sanjeev. Thank you so much for speaking to us at BQ Prime. Once again, congratulations for the fantastic set of numbers that the company has reported, and good luck for the coming quarters.
Thank you so much. Bye.